Hey, this is the Cow Guy Close. I'm Scott Shellady, otherwise known as the Cow Guy. Thanks for joining us here today. All right, well, how about this? Ready? Another miss and more revisions. That's how we could sum it up. We were looking for 164,000 jobs created. Today, we talked about it all week, didn't we? Well, we got 142. In July is 114,000. Remember, that was the big August 5th sell-off? Well, that was revised even lower by 25,000 to 89,000. And how about this? June's revised 179,000. Remember, that was already revised down to 179. Now they revised June's jobs numbers down by another 60 grand to 118,000. So how about this? If you're looking for some good news, I could tell you that the unemployment rate, well, that fell to 4.2 from 4.3. So that's it, folks. Confirmation of a slowing economy as we creep towards November and the presidential election. So far, they've kept this thing together with duct tape and Band-Aids. But I think we're quickly running out of both. Now, my next guest, he's no doctor, but I'm sure he's got some ideas about a cure. Please welcome to the show, Mr. Eddie Ghabour. Eddie, thanks for being on. Happy Friday.
Thank you for having me.
Yeah, that was kind of a mess we got this morning. I don't know. I actually heard some calls before I came out to do the Market Day Report show that we do before this one about people wanting a full point cut. I mean, where do you stand on the numbers, what we got in the revisions? What's your thoughts?
So this really shouldn't come as any surprise for anyone that's been watching your show. You and I have talked about this. We talked about it last time we were on, that this economy is actually slowing down faster than what people are being led to believe. And these revisions are continuing to show that. So I expect the number that we got today is going to get revised down again, right. Which tells us that the labor market is continuing to get weaker and weaker. But the problem that the Fed has right now is they can't cut by 100 basis points because inflation isn't where we are. And so they're so far behind the curve that they're in a lose-lose situation. If they come out and panic with a big cut, I think the market sells off even more because they're going to worry about what the Fed knows and what they're worried about. So I don't think we're going to get more than 25, maybe 50 basis point cut in September. That's just going to be a Band-Aid on what's happening right now because you can't stop the cycle. And one thing I'll end with here is we know that the Fed starts cutting rates is usually a sign that we're at the end of the growth cycle. And then we have to recalibrate, have corrections, and start over again. And I think that's going to be the setup going into next year. So we came into September, October by raising cash in this rally that we had in August. And we're just going to be patient because I don't think you're going to get a rally, in my opinion, until we get through the election, get a post-election bounce, have everyone believe that everything's going to be fine. And then I think that's when you get the rug pull sometime in the first half of next year.
I agree. I mean, I can't argue with the thing you've said. And the ugly truth is, Ed, is I think also is that they made a mistake and let inflation get out of control the first time around, right? Transitory, garbage. 9.1% CPI. The ugly truth about how you get really rid of inflation is by having that unemployment rate go from 4.2 today up to 5.5. That's because you have to reset wages because all the wages went up with all the prices. And now the prices have come down, but wages don't come down. That's why you see all these companies go out of business. And then you get further information that Dollar General and Dollar Tree can't make any money. Darden restaurants have said that they've been rescued by the rich people coming down to their restaurant because they don't see the $70,000 or $80,000 customer anymore. They're gone, and they're not even going to Dollar Tree. So, I mean, you're exactly right. This is a mess. And the reset is, unfortunately, putting people out of work to recalibrate wages so that you can really get inflation under control, right?
That's exactly right. You know, no one wants to say the R word, but that's the only way you're going to get inflation anywhere near what the target is. Because the problem is when you cut rates, that's inflationary in itself. So that's why I say they're in a lose-lose situation. Because if they get too aggressive with cuts, I do think it would cause an initial panic. But then the other thing is you could have inflation reaccelerate next year. And that's a big fear I have because I think that could possibly happen. If you get a reacceleration of inflation while the economy is slowing down, that to me is kind of the worst case scenario that the Fed and no one really wants to see. And this is why businesses are struggling is you're seeing demand go down because things are slowing, but the cost of doing business is not coming down. So expenses are staying high, revenue's coming down. And that's why the small business people in America right now are really struggling and they're getting frustrated.
You summed it up perfectly. They have to thread that needle about trying to, make things feel better to the average American, but not ignite inflation with too much of an interest rate cut. And I've said this before. I'm sure people are sick of me saying it, but I got a first-class business class ticket to come to my show. I'll put you up at the Virgin at the end of the road here. If you can explain to me how cutting rates is going to help bring inflation coming down, right?
Yeah, cutting rates, everyone always, I shouldn't say everyone, but many are begging for it because they think it's bullish. And historically speaking, it's not bullish. You initially get some euphoria from it, but the reality is you're cutting rates because something is wrong. You don't cut rates because things are going well. And they're just late to the game. They always are, unfortunately. And this, you just have to let economic cycles play out. The problem is we had so much government intervention that by delaying the inevitable, it makes it worse versus just letting the capital markets do what they do best. They have government intervention with punching a lot of money in, and now you have these massive bubbles that are starting to implode. Look at these stocks that have lost 30 to 50% just in a matter of weeks. And so it's just an unfortunate reality of what happens when you artificially inflate certain assets.
100%. And I'm happy you said that because I say it all the time. I call it screwing with the laws of nature. When they start playing around with, they're trying to manage an outcome is what they're trying to do. And they don't let the market just trade. And they've been doing this since 2008, since the great financial crisis, right? All the money, they've become so accommodative. It's almost like the Fed's not going to let the stock market go down. You got 20 seconds.
The Fed can't save us. And one thing I'll add is the BOJ, keep your eye on them, because if they raise rates this month, we could see some more downward pressure on our markets.
Yep, that's where that whole carry trade fiasco August 5th came from, too. Appreciate you coming on. That's great stuff, as usual, Eddie. Love having you. You're a big fan favorite.